we're having again Mike Zuzolo, President of Global Commodity Analytics in our All About Commodities segment. And he's going to speak again on how to make your profit, the USDA numbers. You will analyze the USDA numbers, and yet he's going to speak about the trade war right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. Mike, how are you today? How do you analyze the USDA report?
Well, we're going into a report feeding the bull quite a bit, and I think we're going to have a USDA report that will give us a lot lower ending stocks number than what we had in September. We have made some pretty key highs, Luis, with record open interest in soybeans of over a 1 million, almost 1.2 million contracts as of last look in soybean futures. And I don't think corn is at a record, but it's still at over 1.5 million contracts of open interest. The trade price action in futures has shown us a weakening, if not lower, market, and that's been led by the wheat, and that technically and momentum-wise is starting to turn some of these key fund-led technicals more negative. And so I think we need to come in here and support with the USDA numbers the picture technically that's starting to get weaker, especially since we've hit my target price of 615 in Chicago soft red wheat futures. Central Illinois clients told me today that they were able to lock in $6 for new crop soft red wheat in the cash market. It's been a long time. It's been about 5 years since we've been able to do that. So I think we're getting up there at price levels that you need to feed the bull on the report. One last thing I'll throw out at you as far as the actual numbers go. When I look at my price model that I use to try and factor in or figure out what the trade is probably factoring in terms of U.S. carryover levels, by getting to that 615 level in December soft red wheat, lead month wheat, we're probably well below an 800 million bushel carryover already priced in. As for the soybeans, by getting up to almost 1070 in lead month futures, we're probably well below a 400 million bushel carryover. And with the corn getting up to almost 395 in lead month futures, we're probably right at a 2 billion bushel carryover. These are the numbers that I'm going to use as far as carryover levels and versus what USDA actually gives us, and then see if the wheat market can come back around and go through that 615 level or not. If it doesn't, I'm going to assume that we're going to have a technical correction that maybe could last as long as the second part of harvest here in the United States.
And the wheat market is very interesting because we have had several years that it was a very depressed market, and now we had a significant improvement that you anticipated this year. How do you think that's going to last?
Well, we're putting in a lot more acres of wheat if we can get them grown. I think that's how I would look at it, no matter where you're talking about, whether you're talking about soft red wheat country in Ohio through Illinois, or hard red wheat country in Oklahoma, Kansas, and southern Nebraska and Colorado. But, we are planting in the dust in many, many areas, and we've gotten some rain relief in Europe that is stretched into the Ukraine, but Russia is still very dry. We still have a lot of problems in Argentina, as you and I have talked about. I still think wheat's our leader. I think that what I've told clients this week has been pretty simple. We get past the USDA report, then it becomes a weather market again, especially going into the election. I don't think you'll have the dollar on your side as much as we have these past several months. And the Federal Reserve policy and the dollar have been the big keys to unlocking that wheat bull market and allowing us to hit a 5-year high. So I would like to see rainfall really regenerate itself in the hard red wheat belt by the Christmas holiday, because then we probably will come out of dormancy looking pretty good. If we can't get good rainfall between now and December, I think next spring could be very, very bad, and we actually tear wheat up here in this country and go after a row crop or go after milo. I'll give you an interesting story. Usually milo or sorghum is about 40 to 60 cents cheaper than corn in the cash market in central Kansas. Luis, right now it's 40 to 60 cents over cash corn at this point. So you're going to see a lot of milo and sorghum acres next spring if the wheat crop is looking bad when we break dormancy.
And continuing with this marketing talk, what would you suggest for those farmers that already sold a lot of soybeans, a lot of corn, and a lot of wheat?
Yeah, and there's a lot of those people out there, a lot of farmers out there. Fortunately, they are having very good yields, and so they're not too oversold at this point. But with some of the contracts they do, the structured product contracts or the over-the-counter products contracts that they've gotten used to using the last 4 or 5 years, which are good contracts when you're in a sideways to lower market, but they really kind of hurt when you go sharply higher because you have to add to your sales typically and your volume. What I would say to them is you get a break in the price between Friday's crop report heading into the end of October, be back on the long side or defending your sales by the time we get down to the end of October, 1st of November. That would be the mindset that I'm using right now for my clients and subscribers. I hate to have to chase this market if we have a bullish report after Friday, but I will evaluate that. I still think corn is the most undervalued right now because it's been seeing the best export clip compared to what the trade was expecting. And with the wheat at a 5-year high, that really opens the door up to the upside for the corn, historically speaking.
Yes, in the Purdue poll, recent poll released this week, shows that most farmers believe that the agricultural economy is going into the right direction. So do you think that reflects those recent price improvements?
I think without a doubt, that poll I'm very well versed with and very familiar with. It's an excellent snapshot, but that's what it is. It's a snapshot when people are literally just answering questions at the time of the market and the time that poll, that survey comes out. I think it was back 2 or 3 months ago that poll had gotten down to one of the worst levels in 5 or 6 years. And I think it was right after the March or April time period after some of the USDA numbers came out, and the trade started talking about 4 billion bushels of corn carryover here in the United States. And naturally, when that poll was put out to the farmers here in the United States, they were saying this is the worst, and that was in the middle of the trade war as well. So it's a great snapshot, but that's really all it is, and that's what it's meant to be, is a snapshot in real time of where we sit right here, right now.
Are you more bullish about soybeans right now? I'm asking that because the Brazilian planting has the slowest pace in history.
Yeah, and I'm glad you brought that up because DataGrow just came out and said the Brazilian crop is already 50 to 60% sold for the new crop. So you're not going to see a lot more Brazilian farmer sales at this stage. And we know how Argentina is going with the farmers there using those as dollars. I am friendly beans if the wheat and the corn go higher, but I would reiterate to you what we've talked about before. I'm skeptical that China can take all of these soybeans that they've booked from both the Brazilians and the United States export market because of African swine fever still doing damage in that country from what I'm picking up. I would also probably suggest that much like the wheat market and the wheat weather here in the Northern Hemisphere, I can get more friendly to soybeans, and I can get up to an $11+ futures price if we stay dry in Brazil the next 20 to 30 days, kind of like what I'm talking about in the wheat market. But Brazil, both key weather models I follow, Brazil is looking at some real changes potentially in their weather pattern, and they are looking at some pretty good rainfall areas covering Mato Grosso and some other key provinces. It's not a large amount, but it kind of looks like a pattern change if these models are correct. So if we start to see Brazil improve in terms of weather, I think it really is going to be tough on the soybeans unless USDA gives us a real surprise on Friday.
Yeah, we can go deeper into corn right now because the energy markets have improved slightly. So we have seen this week the West Texas intermediate close to $40. So what do you think is going to come for corn?
Yeah, I think we're still on the same glide path that we talked about last time for energies. I actually think energies will start to go down in price, and ethanol and blending and refinery margins will also get squeezed as we get into the end of the year. And I would put a lot of emphasis on that U.S. election We've had two debates now in the United States. The vice presidential debate was just a day ago, and the green energy plan and fracking and things like that were very much talked about. And I think that's where it goes back to, analytically speaking, the fossil fuel and the coal areas of the country and those industries are looking pretty tough if Vice President Biden wins the election, in terms of the green energy plan that they have on their website and what the Wall Street Journal has analyzed, and also CNBC and some of these other key nonpartisan business groups and media people. I would say that the downside in energy is higher and greater than the upside in energy, especially given that we're seeing a resurgence in lockdowns of COVID in some very big countries in the European area and also in the United States. Asia is still looking pretty good, and that's great for commodities overall. But I think we still have a problematic demand picture when it comes to energies because of COVID. And without the stimulus bill coming through before the election, I think that too will create an environment where the airlines do go ahead and lay off a lot, and they stay closed down essentially for another 3 to 5 months.
Most commentators say that the trade dispute with China would continue whoever wins the election. And Kamala Harris just said that Trump has lost the trade war. Do he has lost, and do you think this trade dispute is going to continue whoever is the new president of the United States?
It's going to be uphill on globalization versus downhill on globalization. There are a lot of people in the political sphere and in the global economic sphere that are suggesting that if Vice President Biden wins, he will bring multilateralism back to the table, and that we will try and go back to a more normal situation before President Trump enacted a lot of these bilateral shifts and changes in these tariffs that we have in place right now. I don't think that that's going to happen completely, though. I think that we can try, but I think we've kind of gotten too far past, and too much water's gone over the bridge at this point in time, that the old-fashioned globalization that we've gotten used to is probably something now in the past. And I say that from a currency perspective, especially. Our trade deficit continues to get bigger and bigger and bigger, even with these trade barriers that we have. And the Chinese have made a strategic move to strengthen their currency. So they don't want as much an export market as they used to. They don't want that old style of globalization that we got used to at the end of the 20th century, heading into the first of the 21st century. So I think we're past that point at this stage, no matter who wins.
And what about the beef market and all other related meat markets like hog or poultry? What are you seeing?
The beef market's really impressed me. I was not expecting this kind of strength in the cattle market. The feeder market has weakened as I expected, but the cattle market, the fat cattle market, has stayed strong, and we've had some pretty decent trading around the world and here in the United States plains. I still think, though, at the end of the day, Luis, the hog market is the main catalyst for why cattle are going higher at this stage. And we've noticed with the funds buying the beans, they've been buying the hogs as well. They've been right, because we had a marketing year high in pork exports on our weekly data this Thursday. We were, I think, over 50% bigger than what we had in the previous 4 weeks as far as a 4-week average. So the funds are right by buying, but that pork and bean trade, as I like to call it, I think is really supporting the fat cattle. So I'm about $1 to $3 away in the April fat cattle from wanting to get some real serious hedging done.
Yes, we have mentioned the trade war, and Australia is basically out of the beef market for the dispute with China. How much time more do you think that is going to play within the beef market?
Yeah, I think the price of beef is just too high, whether you're talking about in China or whether you're talking about in the United States or Brazil for that matter, because of the inflation. We have inflation again in some of these really key developing countries, which are very mature developing countries like Brazil and China and India. But the beef prices, I think, are going to continue to lose to the pork and the poultry just from a standpoint of what the consumer can afford. We are still looking at up here in the United States, even with the slaughter capacity returning to normal and the weight still being 20 pounds heavier year to date in the dressed category than what they were last year at this time, we're still looking at prices for a 12-ounce steak of almost $15 a pound in some cases. And so we literally are double for the higher cuts than what we've been used to because the restaurants are not buying anymore. And as long as the restaurants stay closed down, I don't see that changing much. So I really think that the consumer going into the fourth quarter, whether you're in China, Brazil, Argentina, or the United States, they're going to push back on these higher prices and go after either more plant-based meats, hogs, or poultry. Poultry is really starting to catch in China. They're actually ramping up their poultry demand very, very much, production very, very much, because the consumption's going up so quickly. So I think the beef sector's really got a consumption issue here this next quarter.
And what about the harvest in your area? Are you seeing there?
It's amazing. You know, we are probably going to get close to 90 degrees again here Fahrenheit today. I was looking out over the river before we went on air, and the very last soybean field in the whole Missouri River bottom that I look over is being combined right now. So our river bottom ground is going to be completely done by the end of today. We are pretty much done in this part of the country, and I think that most of the clients that I work with east of the Mississippi River are suggesting they're going to be wrapped up with beans this week, and they'll be going on to corn. So I think those harvest progress numbers that USDA gave us on Monday are very accurate.
Your final comments?
I think the final comment would be that when we see the fiscal stimulus bill die and we see the USDA report, I think we need to start thinking more about the election. And I've talked a lot with you about getting a rally between now and this WASDE report and getting hedges in place and floors underneath me. And I've made that recommendation for clients. I feel really good about that because even if I'm wrong, we'll have better prices in 2021.
Thanks a lot, Mike.
Thank you,
Have
Luis.
a great week.
You too. Thank you, sir.